good morning, everybody. Morning, Tony. How you doing, brother? Hope you guys had a good day yesterday. It's pretty fascinating bloodbath kind of drop. The whole news is losing their mind. But, the whole market dropped, and then, of course, before that was taking place, our analysis was assuming that the fair value gap on the daily chart for the indices was going to be reached into this one. And I said that if it blew past that, then we'll probably seek even further prices. And what happened? We've been seeking even further prices. But there is an interesting observation that we're going to look into with the bonds and yields. Why is my chat not showing up? Oh. All right, but yeah, so let me clean some of that up for a minute. Yeah, so it's interesting to see that the yields are pretty weak still. And then, of course, we see the bonds so aggressive. What we can see across the different assets, if we look at the currencies, we see that the foreign currencies are definitely in line with what the bonds are doing. So that makes me kind of suspicious with the yields. I mean, with the indices, makes me kind of suspicious. Not sure how trustworthy that's going to be with this huge drop. When there's a crack in correlation that's pretty dramatic. Of course, we see the DXY falling as well. It's not slowing down. It's following what the bonds and yields are doing. So again, this may just have been a liquidation event that then, potentially leads to new all-time highs being created in the indices. But obviously, that's kind of far from now for us to make any assumptions on that aspect of things. But something we have to keep in mind. Right. So yeah. Go to the daily chart. Yeah, so there's no news until 6. 30 minutes from now. And then there's some news at 7 o'clock, I believe. Yeah. So we're not going to look for any pre-market delivery. At least I'm not. I'm going to primarily focus on what happens after the 6:30 time. But yeah, there's a decent amount of stuff that we can break down or get into, so that's what we're going to do. Make sure I got all the assets ready. So I'm assuming that, this huge drop here, I mean, it's Tuesday. So we have consolidation after a large range drop. Consolidation, we got the DXY still declining, not really showing much of a interest to stay above buy side. So you can see they just purged out this high here. And then pretty much just, continued with the decline in the DXY. So if it was to use this as a trustworthy run higher, and this sell-off in the indices was going to be trusted more long-term, we would have seen this jump above here and show respect to this order block, the inversion for value gap here, and it would have just continued to stay above that. But we pierced this high here, pretty much unseated these traders, traded into a little bit more of this fair value gap. There is a part of it left. So if it was to turn around, obviously that may in the future become some type of target. But for now, we're just going to continue to trust the fact that, we're seeking downside delivery in the DXY. And I've had this fair value gap outlined with this order block as well since, 2 weeks ago, as we were identifying price declining in the DXY. So that's going to remain something I'm interested in seeing if this does continue, obviously. Then, of course, before it gets to that level that I'm identifying here, the daily fair value gap, we do have this weekly low. And then, but we also, ahead of that, have daily lows, right? We have a small little volume imbalance in here. But then again, like I said, there's low here, large wick. The quadrants in that can be used as a early target as well if it does look to purge out the rest of that. This is a weekly, a 2-week bullish order block, 50% level. Wait, is it a normal weekly? Yeah, okay, it's just a normal weekly bullish order block, 50% level. So again, if we were going to hold and want to continue having interest to the buy side, this should not be getting traded through. So that's just further evidence that I'm thinking like, okay, prices, in this case, at least for right now, the delivery is favoring downside delivery, right? There's a bearish order block that's being respected too. You see this up wick here, it respected them, didn't even try to get to even a quarter of it. So that was signaling weakness, right? And then we can see as a result, price has just been, pretty quickly reaching down below. If you count, right, there's 1 PD array, 2 PD arrays here, and then the fair value gap here that's been violated. So that's 3 PD arrays to the downside that should have held if price was going to go higher. So we've been bullish, but because we just did that on this weekly time frame, that's very significant. So that could lead us to this being a sustained overall change in sentiment. And we could start seeing price really dig down into the level that I mentioned down here. It justifies the fair value gap down here as a potential target using our validation and invalidation process. Very simple. And if this was to, start kicking back into overdrive and going higher, I needed to break through the midpoint of this order block here and get back above this inversion fair value gap to then start to trust that, okay, now we're going to start seeking more buy-side targets in a more long-term capacity, or at least, week-to-week capacity. All right. So very simple, okay, not overly complicated, I hope. But that pretty much lays the groundwork for, what we're going to try to look to identify today. We got the bonds going aggressively to the buy side. We got the yields aggressively favoring shorts, at least for the time being. Right, so if we go to the 2-week on this, we also have an order block here and a 50% level. Okay. So these are just some levels that we got to look at for this as well. And again, if the yields are going to continue to fall, I mean, you could see the relationship between the bonds, yields, DXY, and the indices. Right, the bonds dictate or influence where the DXY goes, and you can see that pretty clearly. It's being really, really aggressive, targeting the downside. But then again, there's a crack in correlation between the bonds and the indices, right, versus the currencies that are in favor of what the bonds are doing. So that's justifying, in my opinion, that this drop here is probably just a liquidation event. And because we see what we see right now in this current moment, we have a fair value gap in here for the indices. We have this fair value gap here on the daily chart up above. And then, of course, we have the rest of this range that we could look to potentially utilize. There's multiple layers of new week opening gaps. Generally, if we get it to slice through multiple at once in one particular direction, that's then justified by the other elements. Say if this breaks through all these, and then there's continued support for higher prices in the indices, then that's just going to give us more trust behind our assumption that we could now start to target more buy-side targets. Okay, but of course we use a 3 PDA rule, looking at the indices, and we can justify that, okay, maybe this is changed overall. But in order for us to justify a narrative, at least for the way I do it, that provides clarity and consistency, I need to have more than just, looking at the chart, whatever the chart shows me. I need to have these background pieces of information, because that, everything working in a symmetrical manner and doing things related to risk on, risk off relationships, if it justifies that, then that justifies my overall narrative. And then I can go in confidently, trade either against that if we're in some type of, like, maybe say retracement, or if we're back in line with the overall narrative. As long as I have justification across different assets, it gets me to be more confident, so that when I'm trading for an income or whatever I'm trying to do, it allows for me to trust it and not be so skeptical about my own opinions. And again, that's part of the reason why I always get on these calls, especially on Sundays, and we go over the entire process. What's important? What assets dictate what other assets are going to do. If it's trending, what should be taking place if it's a healthy trend, so on and so forth, right? So yeah, at least for now, for the time being, you could see that we have S&T here as well at the lows on this 8-hour time frame. GBP put a lower low, and now we're racing above this order block. We have SMT here, like I mentioned. Now it's possibly looking to race above this order block. We have a high here. Then we have a high right here for the next level, and then we have another high here as well. And then, of course, we have this for a more long-term view. See if we have anything at these lows. There was SMT here at these lows too, but then, of course, price came down. It created another SMT here, right, with this low and this low, right, lower low. And then price just has skyrocketed above that. Right, so again, today, given the fact that we have been so aggressive to the downside, and there's many layers of confirmation showing us that there's reason for price to want to favor a run higher, I think looking for buy-side targets, unless we're proven otherwise, for the indices, unless things change in the other assets as well, to support more downside, I think that we are pretty much set to start looking for buy-side targets. Right, this huge drop. You could just imagine anyone looking at this chart, just like how I mentioned at the very beginning of the week, people coming into the week seeing that price is so dramatic to the downside, not having any knowledge of what the other assets are doing, they're probably trying to force themselves to sell because they don't want to miss out, right? So that justifies my opinion to want to see if there's reasons for us to want to target potential buy side. And then, of course, if we go into the open and things change, then, obviously we can adjust to what price is showing us at that time. Okay, we have a fair value gap in here too we want to pay attention to. We can see there's relative equal highs up here as well to the buy side. Pretty nice situation up there. If this was to go higher, if it does continue to support this, Tony, what do you see here, right? If it was to go lower and go higher, what could we use to justify a framework to map that out? There's a particular model I'm looking for you to mention. I'll map some of it out real quick. So if we basically went down to go higher, okay, this is a consolidation, right? Where is the label? Right there. Okay, and then we can justify this as a potential area of accumulation. Again, this is assuming the price went down to go higher. right? So consolidation, possibility for price to go lower to go higher, unless obviously that fails. Then we have another accumulation here. Let me see if there's another one up here somewhere. No, we could just rock with this. So yeah, it'd be a consolidation, accumulation, another accumulation. So if we get a strong displacement to the buy side here, and everything on the other assets continues to support the idea of this going higher, giving us a retracement against this huge drop, this becomes a market maker buy model. And then if we can justify this taking place, like say it breaks above this high here, and we continue to see price favoring that, if we could find our model somewhere in there, right? Say you assumed, as we were, that price was possibly going to continue going lower. But of course, I mentioned that there was a risk of it reaching back a little bit. Because that didn't happen, if we just got ahead of this and framed this out as a market maker buy model, if you're comfortable with taking the shorts to a target like maybe this previous week's low here, we had this outlined on Sunday as well, or any other PD array or liquidity pool below us. If you look in here and you go in those lower time frames, you'll be able to find any model that you operate within. So in each of the accumulation phases at the smart money reversal, and then each of the distribution phases of a market maker buy or sell model, every single model you'll ever need or apply can be found inside one of those phases. You can even specialize in identifying one of these phases or a couple of them, and then use that as a particular framework on top of whatever your overall entry tactics are, right? So, we're going to continue to monitor whether this is going to create this, or again, if it fails, that gives us more intel to continue to trust that, okay, we can get involved with something going back down to the downside. One thing I also want to make sure I mention is it is pretty much the end of the month. Okay, because it's the end of the month, things can get a little slow. They can be a little cracked in correlation, as we see being the case between the bonds and the indices. So towards the end of the month, so at the start of the month and towards the end of the month, at the start of the week and towards the end of the week, your risk management needs to be adjusted. At least, that's my opinion. You can, do what you want with that information. But that serves me well. And, that knowing when the risks are higher for things to be a little more difficult or not as clear or clean in terms of delivery and intermarket relationships, it's best to have a plan for that, because it's going to take place. You can't avoid it. So are you going to push in a time like that? Maybe you will, maybe you won't, right? But if you choose to take the responsible route and apply that type of wisdom, I'm sure it'll serve you well, just as it has with me. All right, so yeah, again, I want to see reasons for price to want to seek some type of buy side. Okay, it has been down, it has been bearish, right? So overall, if the markets obviously kick back in line with that, then we'll be able to justify that. There's just too many conflicting relationships right now between these assets that dictate what should take place in the assets we like to operate within, for us to justify going back in and getting in with this large move, unless it's proven. Like say we retrace a little bit, there's an 8-hour fair value gap. Say it retraces into this fair value gap, pauses, shows that it doesn't want to break through these new week opening gaps here, and then we start getting more displacement to the downside, and then the bonds and yields end up kicking into things showing that that's justified. Then obviously, because it's been so bearish, right, we're able to then adjust and trust that, right? But for now, it could run higher or it can just melt. And in terms of what these other assets are doing, eventually the indices will fall in line, because especially the interest rates, they dictate and influence what price does. Okay, so yeah, hope that made sense. But yeah, again, we're going to be waiting for the open. We're not going to push anything right now. And price is not really doing much anyway, right? It's pretty much, at least in my opinion, waiting. Let's go flip through some of the other indices. We got relative equal highs up here too. Huge drop. So yeah, we'll see if this wants to end up kicking in line eventually to go higher, or if we're just going to continue to hold these relationships. Because if that's the case, then we'll see a reversal here, and the low of the week was priced in, and a bullish power 3 for the week is probably going to take place. Going against the, going against the huge drop, which that's permitted, for price to want to possibly look to seek buy side here. And then of course that's justified through the relationships. So we have a really solid, educated view as far as what it's going to potentially do, and then what would support price getting back in line and justify us getting back in line without feeling like we're chasing price, because you don't want to be in the camp of chasing this to the downside. When things are like this, super aggressive, you want to pay attention for price to maybe slow down, get into a small range condition, or see it reverse to some form of a premium, because it doesn't just drop and just continue to drop. I mean, sometimes it will, right? Sometimes it'll do that like it has the last couple of days. But even in that, price still does retrace, take out opposing liquidity, so smart money can pair their orders with the opposing view. Then it offers the opportunity to position yourself again. Okay, so ideally, if you're looking to short, you need to see some type of buy side taken, because work has to be done, because there has to be a buyer and a seller, and there has to be a winner and a loser. So if you're looking to short, where are people that would be the loser if you were able to get into a short at a logical level, based on the fact that we're dropping, right? We'd like to sell at a further premium versus where we're at right now. So that would be, possibly here at this fair value gap. We'll see what takes place there. And then, if that was to take place, what's taking place in these other assets to justify. Or maybe it blows through it and then looks to want to reach up higher. Then we'll have to justify that as well. But regardless, because it's been so aggressive, you want to make sure that you are positioning yourself at an area of opposing liquidity. Like this took sell side here. It dropped. We're below the open price of the week for the weekly range. So if it was to run higher here and the week ends up being bullish, getting in line with what the bonds are doing here, then that just makes sense, because we've been so aggressive to the downside. Price started off and then quickly came down and blew this out. Audio is too low, huh? Is that better? Appreciate you pointing that out, brother. Let me check something. Oh, interesting. Oh, very interesting. Wonder why that is. Damn, what is going on with that? Huh. Wonder why that is. Is it better at all right now? Can you hear it better? Sorry about that. It shows that everything's perfect. But yeah, let me know if that's better. Shows that it should be better. Now, somewhat? Oh no, somewhat. What is this? Is it clear or is it like? Hmm. Oh, it's all good? Okay. Thank you, Kamal. Yeah, I'm looking at this like, what in the hell's going on with this thing? Is it clear though? Because I'm looking at it, it doesn't show that it's connected to my microphone. It's so weird. Wasn't doing that earlier. No, I'm not in a trade. But yeah, let me know if the audio's okay. It's perfect? Okay, beautiful. Yeah, I don't know what I was checking everything earlier. It looked like it was totally fine. But hey. But no, I'm not in a trade right now. Generally, I don't take a trade pre-market, especially if we've been so aggressive in one direction or not, or the other. Because I mean, if you push shorts, then it could reverse. But if you look to enter early and try to buy, it may continue to go lower still. We're not, because time is not in line with the delivery we'd like to look for. You have to let time and price line up. So if it's not in alignment, if one of those things are out of alignment, uh, there's rules. You got to follow the rules when it comes to time and price. Price being liquidity, points of interest like PD arrays, um, components like that, and then of course there's time, which is the open price or open of the sessions. There's macros, and then of course little time windows like the silver bullet and different things like that. So none of those things are in alignment. You can make the argument that right now we're in a 550 macro, the first macro that shows up, the pre-market macro. Right. Sometimes it operates well, sometimes it doesn't. But because of the current sentiment that we've been in, right, price has just been aggressive to the downside. Macros work across the board on every asset. They work in, I'm not sure about crypto, but they work in commodities, they work in bonds and yields, they work in Forex, they work in indices, they work in everything. Because the whole market works off of the same algorithm or the same logic, however you want to look at it, whether you believe there's one or not. There's things that repeat continuously. So obviously there's something working in the background to present that logic. And because it's controlled in that manner and there's something dictating what it's going to do, that's how we're able to identify signatures that repeat, that are consistent, that could then eventually give you a, possible, consistent income. Right? So, yeah. But yeah, if the mic ends up having any issues throughout the session, definitely let me know in the chat so I can fix that. I don't want y'all to be, to miss anything. All right, so again, we have that 550 macro in play. We see that things like the Dow, right? Things are looking like they just shifted. We have a run on stops here. There's a possible likelihood for price to want to run higher. Can you explain strategy in New York session 8:30 at the news? I'm not sure if I'll get into my entire strategy because it encapsulates 4 different models. But in terms of what I'm doing at the 5:30 at the news, if there's news at 5:30, then generally, there could be an opportunity that takes place. But again, it's based on like what your direction is, what liquidity is presented, intermarket relationships, right? Is there justification? Is there, a news event coming out later that day, maybe NFP, FOMC? Is there a news event that week, right? So when it comes to the 5:30, because I'm in Pacific Standard Time, which is 8:30 for you, unless there's a news event, generally it's not something you want to participate in, and you want to wait till the actual open takes place, because throughout the daily range, specific times in the sessions have a role in the overall daily range. So if you take an entry thinking we're going to go bullish before the New York Open takes place, you may get caught into the manipulation phase. That's why maybe you'll call a direction, but you'll get stopped out before, and then all of a sudden it goes in your direction. Over the last 5-6 years, I've realized that most of the losing trades that I used to take was because of that. Especially if I saw price go my intended direction, that was generally what the problem was. So definitely do a study on that, because it's pretty eye-opening, and it'll save you a lot of losses. By the way, if you get value from the content I provide, definitely like the video, share with some friends. Definitely helps the channel out. Appreciate your guys' engagement and continuously hopping on. It's a vast YouTube world of traders, right? Some are good, some are liars. But the fact that you guys come and spend time here, I greatly appreciate your time. So thank you. But yeah, I hope that answered your question, brother. But then at the news as well, you never trade at the news. You never trade at the open of like the New York session when it opens up. It's not worth doing that, because again, there's a lot of manipulation that takes place, and you don't want to get caught into that. You want to let it manipulate, do whatever it's going to do, then see if liquidity was taken, right? And if your narrative is proven to be correct, then you identify, what price could potentially do in terms of targets, and then in terms of whether you have an opportunity, if your model's there or not. All right. So yeah, I hope that answered your question. If you have any other questions, let me know if I didn't clear up any confusion there. Yeah, let's flip around real quick, see what's happening. Yeah, we're gonna have to have some more one-sidedness, right? More decisive delivery in the DXY. And then again, we're going to monitor this and see, like, if this thing just starts to tank and then we see the yields all of a sudden turn around, I mean, we're still at a logical level where it could give a response, like back to the buy side. Because if you look at this time frame, I mean, you could make the argument, if you go from this low to that high, it could look to want to run higher, because that's like equilibrium, discount, and so on and so forth. If that does take place and we start rampaging to the buy side, and then this just acts as a run on stops and starts tanking to the downside, that may end up justifying the drop we see here. But again, even if it is going to drop, even if we're going to get in line with that, which again, that could be the case if this possible market maker buy model situation fails, we still have to see it go against that, because we operate within power 3, right? We know power 3 dictates the movements, right? Or it outlines the movements, and one thing has to happen before another. And like I mentioned earlier, we want to see the opposing liquidity taken as a justification for price then displacing away from that, back in line with the overall narrative, right? because it's been so bearish, I wouldn't be surprised if this ends up being a retracement day today. And then of course if DXY continues to fall and all that, then we may see a little deeper retracement. We do see this run higher here and then a very quick movement to the downside. So if we can't even come close to breaking through, like say it really shows resistance at this low, this whole entire movement here, right? It's extremely balanced, right? It's delivered buy side clearly, and then all the gaps over here were fulfilled. So buy side was delivered, sell side was delivered, buy side was taken, sell side was taken. So we got to see what this fair value gap ends up operating, or how it operates, right? If it runs up there, shows a little to no like excitement to get through that, and then we start getting more displacement. Again, those are all justification for us to then look to get back in line. If you try to enter here without any type of retracement, you may get it to fall in your favor. But then again, you run the risk of it running back against you if you don't be patient and let it go against the overall downturn. So then you can make sure that it does its work and it's to be trusted, especially when there's correlation issues, right? If DXY is falling, we don't want to look to short indices, because at any given moment it may hit a higher time frame point of PD array and then turn around and then fall back in line with symmetrical market behavior. So these are all things that you got to keep in mind. It makes you more selective. It stops you from being the over trading, over leveraging, impulsive trader when you understand certain little things like that. So intermarket relationships are very, very important. So if you haven't focused on those, you'll see that I mention those things all the time. So hopefully it'll inspire you to take intermarket relationships serious, because it's extremely helpful. All right, so yeah, we got these little areas here. Again, we want to see how the behavior is with this. If it is going to be a downside delivery and it's not going to be bullish overall, then we should be able to see these levels here hold. It shouldn't have to give us a deep retracement. We already delivered from here. There's already a lot of buy side delivered there. The quick impulse lower shows that this could end up being a balanced price range, this whole upper portion of things. So preferably, if we are going to stay bearish, we'd like to see respect inside this area here. Otherwise, again, there's a likelihood for us to want to run back into that range if it's not going to respect it. But yeah, I'm assuming, right, if things will continue across the board and things don't change with the other assets, that we may see this end up being a bullish day, just to come up and deliver some of this in here. And then whatever happens in there, right, as long as we don't lose this high here, okay, or lose, because if we lost this high, that's 1, 2, 3 PD arrays plus a bunch of new week opening gaps. So if that was to all get violated, obviously, what reasons are left for you to then trust pushing sells further? There's really no reason at that point. You're just like trying to demand the market do what you want. And the market doesn't care what you want, okay? It cares about what it wants to do. So if we could see these types of things hold, like I said, if, this low, right? Let me pull that down a little bit. Yeah, so this low here, right, the lower portion of this little box I made, let me label that so you guys know what's going on. We should be able to see it continue to stay weak if it is going to drop. But if that's the case, for us to trust that we're not going to turn around, given the fact that correlation is not it's not supporting indices really going lower, right? If like DXY falling, the bonds going higher, that doesn't support on the back end price going lower in the indices, right? That's a cracking correlation if the indices are dropping with that in place, right? So all that would have to be in line, right? If this is going to go higher, that's all going to have to stay intact. DXY going lower, bonds going higher, yields going lower, right? If not, right, if it doesn't stay intact, then this turns, and then the bonds turn around and start declining. It's this market right here. Say we start to decline aggressively here, and then say we see the DXY, say we see the DXY go higher, right? If that takes place, like all that ends up changing, then that supports this going lower and then justifies this low, and a more longer term view, the price is going to change now from bullish to bearish. But again, if all this continues to look the way it does, then this will probably have just been a liquidation event, you know. And as the stock market likes to do, as you've seen the past, 8 years, it does these massive declines, then all of a sudden there's a new all-time high, right? So we're in a time where bearishness is permitted also seasonally for the indices. So it's not surprising that this has taken place. Again, for the last couple of weeks, we called for the fact that, there was going to be some type of retracement. And I said that if it blew past this fair value gap in here, if it blew past that, then obviously there was a reason for us to justify the shorts, at least to this low, right? But because of the correlation effect, we have to see things kick back in line for this to be a more trustworthy, sustained move. Otherwise, again, there's a risk for price to want to come back and make some new all-time highs. But for now, right, we're not going to assume that because it's been so aggressive to the downside. Overall sentiment, we want to see reasons for it to support price continuing to go lower. Right, so we're going to go in justifying that perspective, watching for things that justify that. But again, we have to see the other assets like the DXY, bonds and yields, and then of course the currencies as well. We want to see all that fall in line with being supportive with price going to the downside. The likelihood for price to want to retrace here is greatly increased because of how aggressive it's been. But if the week does end up being bullish, right, we'll be able to adjust with that as well. Today, again, there is a potential for it to want to reach higher. Depending on what happens, if it does do that, right, say it runs up here like I mentioned, if we start getting massive displacement from here and we see, say, the DXY come out and blow out this high, then obviously, if we can also see the bonds give a turnaround as well, that supports us trusting finding entries to the downside. Okay? So yeah, keep that stuff in mind. So yeah, because we are ahead of the news, or we're not ahead of the news, we're ahead of the open. Again, you want to keep in mind if you did take a buy that you want to really understand that you can be caught in a manipulation because we're not at the open yet. The open's going to come out and it's going to shake things up as it always does. Right? That's why many people that get in before or too close to the open, which is part of my rules to never do that, because if you most of the time you look back at some of the losses you've taken pre-open, you'll see that if you called it in the right direction but you took a entry early before the open took place, most of the time you got stopped out before the open and then it goes in your direction, and that's because of this rule. That's part of what they do at the open. It's a characteristics of how they operate, or at least from what I've seen. They like to use the open or any news event as a reason to shake people out. Then they reveal the actual intention. That's why waiting for time to line up and stuff. We're also outside of the first macro, the 550 to 610 macro, or 550. It's like 850 to 910 for Eastern time. But yeah, we're already outside of the macro. So yeah, just consider these rules. Obviously, these are just things that I think about, things that I share with others in terms of considering certain rules of engagement. I hope that buy works out. But yeah. IFVG. Which one are you talking about? This one right here? Or are you talking about a little lower? Well, 1 minute. check on the EU. An IFVG buy on the 1 minute. Oh yeah, so the feeds are going to be different. That's a thing about currencies. I look at the futures. I only dig into futures delivery. But there's a Euro futures and a GBP futures. So they're going to look a little bit different because you're probably using a different data feed. That's probably why I don't fully see whatever it was that you entered. Yeah, hopefully it holds. Right? But again, I'm just going to be continuing to wait for the open. Because it was so aggressive overnight, again, that's another reason why price could very well turn around and dig into some form of liquidity. There's no sell side liquidity that's been really purged, and it's just been one-sided to the buy side overnight. Look over and share your analysis. I think I am sharing my analysis, to be to be honest. You said on the 1 minute? Yeah, I'm not sure. But yeah. So yeah, we're getting closer to the open, so let's continue to look at what the Nasdaq's gonna do. Again, I mean, you could also see this too. We see this large wick here. If you break that down into quadrants, those are also extra levels of potential resistance that we want to look over and see, how it's going to be when it hits those levels. Right. But again, before any shorts are to take place, there's probably going to be opportunities maybe to buy up into here. Again, not for me because I only take entries during a macro or 5 minutes before. Sometimes if things line up, maybe 5 minutes after. But yeah, the timing element, generally, I like to wait for the open and then get as close to the macro as I possibly can. And if there's nothing delivering around those macros, knowing the fact that, those macros are there for a reason to trigger in like, one-sided spooling events. If you don't want to get caught up in consolidation or things that don't really move, it's another one of those rules that I like to operate within, because you're getting yourself in the best position to catch the actual move, because time has to align. If time doesn't align with price, or aka your model or point of interest PD array that you're trying to trade off of, most times it may look beautiful, it may look like it's there, but in reality, you could get taken out or get stuck in consolidation you don't want to be part of, especially if we're before the open. So yeah, we'll see what takes place at the open. You guys got any questions? Again, I appreciate y'all hopping on. It was a very interesting observation I made yesterday. The 2025 open is right here. So we came all the way back down to when price opened up on the year. So all the gains that were accomplished from the start of the year had just been completely wiped out in just a short amount of time. So, I mean, that's pretty bearish to me. Right? So, again, we're just going to want to see something to justify the opposing view. Yeah, isn't that crazy? It's crazy. All the gains just got wiped out. So. So, yeah, we'll see what happens. Again, it's not an unreasonable observation to assume that price may want to dig a little bit into the fair value gap or some of the ranges that were left, some of the liquidity that they left behind. Let's go see if we got some areas to observe. We do got this low here for the S&P. We pretty much blew out all these levels, but we have this low as well that's available. So fair value gap in there. Any type of short, if that is going to be of interest, again, we have that outline with that balanced price range. So, you know, I'd like to see us get up into there, then set up some kind of move when time and price align. Because again, we got to be extremely rule based if we're trying to be consistent as traders. You know, anyone could just go in there and just, you know, toss here and there, but it's a different. You got to operate differently if you actually trade this, like trade for a living. Because, you know, if your bills need to be paid because of, like, as a result of your trading, you'll think twice. At least some people will, you know, because rules are what's going to save you. You know, knowing what to do, when to do it, why you're doing it, what validates whatever it is you're trying to do. All those things allow you to not be a nervous wreck living a miserable life as a trader, because a lot of people do that. Then they come to find out that, you know, they can't can't deal with it because they don't want to change or listen to rules. Right, so let me see, did it reach into that yet? No, so you can see that there's now relative equal highs here too. So I mean, that just makes it even more likely for me to want to find something to attack this level here. We got consecutive up candles. That's possibly surprised it's not showing as an order block, but you know, that's kind of surprising it doesn't show that as an order block. But again, like I mentioned, we have this large wick, so we'll see what happens if it runs up into that. Right, remember I mentioned these levels to watch for how it behaves. If we get strong resistance from there and it looks to really displace from this area, maybe even leaving the midpoint of this wick, plus staying below this level here that I mentioned earlier. And then if at that same time we can see DXY rally, all that stuff justifies us going in and then maybe looking for this low. Right, so yeah. We got 5 minutes to the open. So we will see what price wants to do. I don't believe they're going to leave this wide open, but we'll see. I'd like to see the open. If we are going to drop, first and foremost, I'd like to see us purge out those equal highs, then look to possibly target more sell side, but we'll see if that gets offered. And so just looking at the highs here, seeing if there's any kind of SMT. As we could see, there's really no SMT. I guess you can make the argument that there was one here. Higher high, lower high. But again, preferably, I would have liked to seen us run up above these highs a little more aggressively, so I can ensure that work was done above those, so I can then position my logic around that being taken. So yeah, we're moving into the open, so we'll see what happens here. There's still a possibility for that to take place. So again, that's what I'd like to see before I do anything or consider doing anything. And if it just melts, right, then it just melts. And you'd rather feel the pain of discipline versus the pain of regret. All right? So sometimes following your rules is going to keep you out of particular ideas. But for the most part, long term, it'll save you. Especially if you have an issue of blowing accounts, making bad decisions, impulsive decisions. It's best to try to figure that out. And that only comes from you applying rules and following them. So yeah, we see the yields continuing to fall. So we'll see if that's going to be what it wants to continue doing. Let me clean some of that up real quick. Yeah, there's not really much showing us that this is going to stop doing what it's doing. So again, the bonds going higher is not in line with how things are supposed to be operating when it comes to the relationships that the indices have with the interest rates or the DXY. So that makes me not trust that price is going to short yet. So because my understanding of that, we'll see if that, if that is something that benefited us, kept us out of a, potential early short that could end up in a loss. If we were being impulsive and thinking, oh, I'm going to miss it, right? So we'll see what takes place. We are engaging this sell side here. So we can see there's a run on stops here. Strong shift in market structure. Left relative equal highs right next to a fair value gap. We're declining into the open price. So we'll see if this is something that, gives us a launching pad to get us up into this area. We're also below the daily open price. So if we're going to have a bullish day, right, this may also set that up as well. Set up that framework. Again, my rules state that I don't trade at the open and I don't look to engage outside of a macro. I have to be at least close to one. Those rules sometimes make you miss opportunities. But guess what? I'd rather miss and understand what's going on in the market so I can have a deeper understanding rather than forcing entries because I'm impulsive and can't wait. Yeah, you can make the argument that this was a run on stops, shift in market structure, fair value gap right there. Now we're coming right back down, taking this out. So let's see what the open decides to do. Again, I said earlier that I'd like to see us get up above these highs first if I'm going to look to short, right? If it leaves this, one of my rules is also I don't like to sell when there's equal highs left wide open. Because again, there's a risk of price wanting to come back up there and stop you out, right? These are all things that I've learned over time. Never short equal highs, never buy equal lows. You want it to be engaged, especially if you're trading the YouTube model. I mean, the first thing is, where's the run on stops, right? So, and runs on stops generally, like big moves or just the initial moves that are actually meaningful, those moves come after run on stops. Almost every model, this is something people don't know too, when you're creating an ICT model, like a personalized one, pretty much every single one of the models that he teaches himself all require a stop run. There's a couple here and there that don't, But for the most part, the ones that are easiest to follow are the ones that take the stops first because it shows you what took place. All right, so let's see what DXY is going to do here. See what the bonds are going to do. See how the currencies are going to behave. We got EU hitting a new week opening gap. It's kind of staying inside of that. We see the Nasdaq is in fact wicking off this midpoint, or not. It couldn't even get to the quarter point, so that's kind of enticing, right? It's showing that there's relative weakness still, or interest, right? There's no buying and selling strength or weakness. It's interest for a particular level to be attacked or not. Now look, if this ran up above these highs first, then showed us this, I'd absolutely look to want to favor a short. And we got inversion fair value gap. There's just one thing missing, and that's the stop hunt, right? The run on stops, right? Not just any old run on stops, right? Like a higher time frame run on stops, like at least 15 minute, 5 minute. That's in alignment with the overall narrative as a whole. So because that didn't take place, if you listen to what ICT says, right, and if you want to be a person that's rule-based, you'd understand that that doesn't offer an opportunity. And if you took an entry, you're breaking the rules. So is that something to be excited about and praise yourself over? Anyone could just throw an entry in, But again, your long-term success is going to be determined by your discipline and ability to follow rules. And of course, not over leverage and over trade, because those are key elements that destroy everybody, especially if you have a good week or a good day and you come in the next day way overconfident and you just start dumping things outside of your rules. I mean, you learn very quickly. I'm sure all of us here have learned. It's it's the pain of regret. And I'd rather miss something like this knowing I followed my rules rather than take an entry outside of my rules and feel guilty about that. Because I know next time if I do that, go against what I know I should be doing, it'll probably end in a loss. Anyone could get lucky, right? Luck is a thing in this industry. But, luck and hope are not strategies. So you want to do your best to stay away from those elements. But yeah, so far seems as though things are definitely cracked in correlation still, right? DXY is still falling, indices still falling. Let's see what all three of them are doing right now. There's a huge crack in correlation between these as well. We got the regular trading hours gap above price with the Nasdaq. And just look at the huge crack in correlation. Is that something that you can trust a short? If you take an overall overview approach and do the things that we do, like that have proven consistency, you think going against that would be trustworthy? It's high risk if there's cracks in correlation between the indices, plus if there's cracks and correlations in the other assets. That shows a low probability condition. Generally leads to high resistance condition. Sometimes it works out. But again, like I said earlier, anyone can get lucky. If you go in there, winging it on the next time, you're going to really wish you didn't. And then again, there's multiple rules in play right now that have kept me from pushing the button. You can make the argument that, there's a trade there. We missed it. Oh, we didn't miss anything if our rules aren't in alignment. And some people would get mad at that. Oh, I missed the move. Getting mad at that is like you seeing someone else at your job do a job and they get paid for doing their job and you're mad at them for doing their job. You put that into trading, you can't get upset if something delivers that wasn't your model. Maybe it was someone else's model. You know, getting mad at that is just illogical, or upset with yourself because of something like that is illogical. It's counterproductive. See, so we do have this run on stops here. So what would I be able to do here if I was to look to engage? Well, this high here, if it breaks that high, that could be a shift in market structure. We have a clear target, that being this fair value gap up here, and these relative equal highs. So maybe this portion of price delivery here, right? Maybe that, if it gets above that, could present us with whatever model it is that we want to operate within, right? If it does that, then we also have a fair value gap here. We also have a potentially assumed power 3 to get to the buy side after a extremely long stream of down delivery, right? This going higher, given what overall the indices have been doing, though, obviously it's counter trend. You know, the huge drop, unless it's proving that it doesn't want to do that, because we've broken through so many levels, obviously we got to respect what price wants to do, not what we want it to do. You know, but if there was any type of buy that was to take place, it'd have to shift above the high here and then present my model. Plus, we're at the open as well, so if it was to go higher and just reasonably reach into here, we're not saying it's going to get up into here or turn around and be bullish overall. This is just a counter trend opinion, right, that could get us into an area where shorts may actually deliver in a way that aligns with our rules. You know, and again, if it rejects that, I mean, you could make the argument that there's this, right? Maybe that's what is used to deliver it. But again, my rules state, for me personally, right? You don't have to follow the rules if you don't want to. But for me personally, I've learned over time that selling equal highs is not, it's not something you want to do overall. Or buying equal lows is not something you want to do overall. You want those things to be engaged. They don't like to leave these types of things. And if you can see it purge that and then all of a sudden get in line with what your assumptions are, it's more likely that you'll have a favorable experience. You know, assuming that you have a model that you operate within. I mean, there could be a argument, right, that this large wick here, delivering the way that it did, could be a reason why it doesn't want to get back into that level or dig deeper into it. Again, that doesn't justify ignoring the fact that there's equal highs up there, you know. But when you see a fair value gap and a huge wick right next to it, a lot of times price won't have to come back into it and it may leave it open or look like they left it open, right? When in reality, they delivered both sides given this large wick and then the large down candle. So if it doesn't come back into that and it does tank, right, that, you know, it's a reasonable assumption, right? Because we could see that that's clearly something that took place. Yes, and a lot of times it doesn't have to come back into levels like that. But again, these equal highs here already disqualify me taking any type of short right now. And we'll see if that saves me or if it costs me missing a move. Either way, you know, following the rules, I think that's a profitable endeavor long term. And so, yeah, we're going to continue to monitor this fair value gap in here, see how that behaves. Okay, where is my... Doesn't want to load on this chart for some reason. Yeah, we could see regular trading hours gap. We could see it on this one. I don't know why it's not showing on the other one. So we see the regular trading hours gap in here. It didn't even want to come up into that, so that's kind of interesting. And then plus that wick that I mentioned earlier, how it traded through like down already once and then came all the way back, offering buy side and sell side. Then we had that large displacement, the down candle. this one right here. Right, so, and then we're staying below that regular trading hours gap. So starting to show more evidence, more continued evidence. I don't know why it doesn't want to show the level, but it shows on the other one. But yeah, we can see how it's holding now below that. Again, this is a mess in here. Okay. So we got a macro coming up in 10 minutes. So that's where my focus is going to be. We'll see if that macro ends up being a reason why price does want to come up and maybe sweep these highs out. This is the cleanest level on the chart right now. Yeah, we still see a pretty dramatic overall cracking correlation here. You can make the argument that this did end up now creating a strong SMT at the highs. So that may also be a reason why this doesn't want to get tapped into. So we got that large wick I mentioned on that 1 hour after or before price did that huge down candle. And then we got these equal highs here, right? Trying to make an argument for price to get up there is a bit, it's a bit hard to make the argument when we have the wick I mentioned. We see the SMT now just to add on to it. And then we also see that we're now staying below the regular trading hours gap. So these are all reasons that price may not want to get up there just yet, right? But again, deriving that opinion, right? We had to wait for certain things to pop up, regular trading hours gap. This huge run higher, SMT was not present there. So in the moment, there was just not enough reason for me to believe that it wasn't going to take these highs out. Right, and we got this little mess in here. So outside of a macro, right? Right at the open. So taking an entry anywhere in here would have broken multiple rules that have got me to where I'm at, which I refuse to compromise for any reason. We can see that the inversion fair value gap there looked pretty nice, right? Inversion fair value gap. Price delivered from there. So yeah, it's looking pretty smooth now. It's opening up after it was consolidating and, you know, bouncing around. So yeah, we got this inversion fair value gap here too. Right, so you'd have to observe how that's going to behave. You know, again, me pointing out these levels, you know, I have my models, right? And I'm assuming that you guys have yours and the things you like to look at. You know, some people use fair value gaps, some people use order blocks, inversion fair value gaps. You know, there's a whole laundry list of things that people like to use as an entry tactic. So again, you know, models are going to be subjective for everybody. You know, my model may not work for you. You know, maybe you trade something entirely outside of the things that I look to operate within. I don't trade inversion fair value gaps for the most part. Now, again, it'd be a different story if we had this high run, right? If it ran out these highs, then started delivering all this. Because I can make an argument for multiple things. You can make an argument that this is a market maker sell model, a 1 minute market maker sell model in this potential decline. You can make an argument that there's a breaker in here. You know, you can make an argument that there's an inversion fair value gap that could have held price and did hold price. You know, you can make an argument for optimal trade entry. Take it from this high to that low. Price came back into premium based on this range here that you were trying to frame out as a possible entry, right? So you can see how multiple layered models, or multiple models layer on top of each other. You know, the more models you can see layering on top of each other, I mean, that's a pretty decent confluence, you know? But again, that's just a testament to the fact that you really only need one model. Multiple models get you to a very similar view. It's just different ways of viewing things, given whatever circumstances you're dealing with. You know, so yeah, watch that fair value gap here, like I mentioned. It seems as though that's going to hold. It's a very interesting delivery here. You know, we could see that we stayed below this, stayed below the regular trading hours gap. Didn't even come close to the midpoint. But DXY is not really doing much. We do see that there's that we're still very much interested in going higher in the bonds. But again, it's been, you know, going higher. I wouldn't be surprised if it does give a turnaround here. If it does do that, and then we also turn around here and give a retracement on the yields, and DXY was to do the same, you know, and turn around and start going higher, then we're starting to get more intermarket relationships supporting the drop versus just viewing the indices drop and then just assuming, hey, I'm going to just go dump sells in. You know, it's not about, you know, seeing what one market does. You know, we want to see what the whole picture is, so then when we get in, we're not so paranoid about price turning around or is my bias right, all that stuff. There's solutions to those issues. You know, part of that is understanding the overall relationships. But yeah, that fair value gap, you know, delivered beautifully. All right, so again, whether you felt comfortable taking something like that or not, that's not up to me. You know, but you see different things we pointed out, different things with the thought process, some of the stuff that kept me out of taking a trade. And then as price has delivered, obviously there were some particular reasons why, you know, you could have made the argument that, oh, maybe it wouldn't have wanted to come up into there. You know, that large wick I mentioned, trading into the fair value gap, we can see how that has left this fair value gap open. So you can see the logic validity as far as when you see a fair value gap and a very large wick right next to it, like this one for the bearish example, right? It's a bearish fair value gap, but there's a huge wick here that offered both sides here. And then once price delivered, traded a little bit into it and then pushed away, it doesn't really have to come back into there because they've already done work there. So it left the gap open, you know, or the fair value gap open. You know, it's one of those scenarios where, you know, it answers the question, is this fair value gap going to stay open or not? You know, it didn't have to here. We could see that obviously now because this ended up being a balanced price range, right? And then of course price didn't even have to come up here either, because like I mentioned earlier, this whole entire delivery created the scenario where it wouldn't have to come back up there. You know, I would have liked to see it pierce this a little bit more, and that would have been justified, right? Even, you know, it probably would have done the same thing and left this open. It would have done the same thing even if it ran the highs. But I required that this morning and it didn't offer it. So guess what? I'm a disciplined trader, rule-based, and I don't break my rules no matter how pretty it looks. Because I know if I break my rules and that becomes a habit like it used to be, it never ends well. But again, we pointed this fair value gap out. You know, whether it was something you would have felt comfortable with taking, it's up to you. But clearly it was an opportunity. Now we're in the 650 macro, so we'll see what price wants to do here. Yeah, we got this consecutive down candles here. Got that run higher. Let's go see what that looks like overall as we move up. So if you think of Power 3, it didn't really do much of anything related to Power 3. It's just been really aggressive to the downside. So you could possibly make the argument that we also have a bearish order block here. So maybe some of those moves weren't taken earlier. But we see this order block here. The only time I would be interested in price looking to turn around and start going bullish again is if we violate the midpoint of this order block. Otherwise, these levels should be able to hold price. There's also a new week opening gap level here from a couple weeks ago. So there's another high there, or a area of potential resistance. We've gotten down below the 2025 open, which is just an interesting observation. And again, we have sell side here. Price ended up running this low. Whoops, this low right there. So yeah, we'll see what happens. All right, if price returns back up here, maybe everything starts to support the downside. Right, maybe the currencies turn. The bonds end up coming off the high. Maybe the yields turn around and start giving a aggressive punch higher. And then, of course, if the DXY starts to get strength, if all that takes place and price returns to this order block and starts displacing again, there's another scenario for me to want to possibly look for potential shorts. But if it was to violate this midpoint of this order block, interest would not be down to the downside unless it holds. But for now, downside is obviously being supported. Still have a shaky correlation going on. Looks like the indices have fallen in line. There's again that SMT at the highs. So yeah, it's pretty nice volatility. It just did not offer exactly what I wanted within my rules, and that's okay. Definitely a beautiful slide in low resistance fashion. The currency's consolidating overall. We see the bonds are very excited to the buy side. Do see that there's this little gap in here. Price keeps this up. We may look to target that before it attacks the lows. But yeah, we'll see. Notice how we're not impatient, calm, cool, and collected. Price delivered. Okay. It's running to the downside. That's great. Did we miss anything? Did I miss anything? No. It just delivered, didn't show me what I fully wanted, and that's just the way it goes. So we know that there's always continuation variations. We know that there's always another opportunity. We know that there's always something that'll come. They're like buses. And since I know my rules, I showcase it every week. Right? Show it pretty much every day. And it generally works out. Even when things deliver, we could still get back in line. Now, we'll see what price does. If it returns back into this, right, maybe we can observe how the response is going to be there. But again, if we just start rampaging now with DXY selling off, this may just be a full-on Judas swing. You know, and then of course come back up into here. If we take these highs here, everything that I've been mentioning about these, about equal highs being left, I mean, it'll just solidify the validity even further. You know, so yeah, let's see the response here. This is I believe it was at 1 hour. Oh, it's a 2 hour bearish order block. So let's see the behavior there. Give me 1 second real quick. I hope y'all can hear me. Oh damn, my bad. Didn't see the chat. Yeah, yes, Yasinbi? Haven't seen you here before. I'm assuming you're new. Appreciate you hopping on. Yeah, Kamal, I'm happy that that worked out for you. Good job. But yeah, so like I said, we want to watch what this response is going to be from this order block. This is a 2 hour order block. I don't know why I put FVG. If you drop down to the 30-second, maybe it'll present us with some type of YouTube model within the context of that 2 hour order block being delivered to. On the 15-second, maybe it ran something. Sorry about that train. They always seem to roll trains around. Audio streams, bitrate. Can y'all hear me okay? There's been a lot of technical nonsense today. Sorry about that, if you guys can't really hear me at this point. It's all good? Okay, cool. I don't know what was happening earlier. It's a bunch of nonsense. But yeah, we'll see what ends up delivering here. Again, I'm still keeping my eyes on these equal highs up here. Because you know, DXY, I still don't see enough evidence for me to you know, really get in here and justify continued shorts. Although again, I wanted to see what took place here. For me, unless I was just taking an entry off the order block, which I don't generally do, you know, it doesn't mean you can't do that, or you know, it doesn't mean that that's not some type of model you could frame things around. It's just something that I don't generally do it. But you can see, right, I said let's watch that response. And if there was like a short-term high here or something that was swept and DXY was rallying, you could see that it's not, you know, it's declining. So this is not indicative of bearish indices or trustworthy bearish indices, you know. But obviously, that 2 hour order block delivery has been fairly decent. See, so me waiting, demanding my rules to be in place, If I assumed that, oh, okay, we took the low, so let me pick this low and assume that it's going to reach to the highs without seeing my model in play, if I disregarded some of these other things I've been mentioning, if I tried to force a buy in here, demanding that these equal highs get taken, obviously that would have ended in a loss. I said, let's watch the response from the 2-hour order block, right? And I went to the seconds charts, tried to look and see, if there's any type of opportunity. There wasn't for me to catch a buy or a sell, And again, unless I was just using the pullback into the 2-hour order block I mentioned, there's no opportunity. I don't generally trade like that, just off of like a higher time frame level. I have to see a higher time frame level met. In this case, for example, a 2-hour order block, frame the assumption that there's going to be a response in line with the higher time frame overall direction, in this case, which is bearish, until proven otherwise. But once price gets into that level and time lines up, so price is the point of interest, right? POI or PD array from that higher time frame, price trading into it. Then I wait for time, right? Kill zone, New York Open, macros, right? Once I see all those things align, then I'm like, all right, let me go to the seconds chart, like you saw me do. And that's like the sequence of events I utilize for majority of my setups. And if all those things don't align and I don't see things showing what I want to see it show across the board with the other assets in line with what my assumption is, I don't take a trade, which I've showcased here today. I only learned this stuff that I just mentioned to you it took the entire time of me learning how to trade. It took, for me at least, making all the mistakes that I made, trying to figure out through back testing and watching replays, because I've recorded my videos all the time. I have my own archive for each year. So I have a trading journal as well. So I journal in the journal, and then I also record things so then I could watch and hear myself think out loud. And then after hours and hours and hours and years of just reviewing those things, these are the types of things that I saw, just obviously a tiny portion, but it's a very important piece of logic when it comes to the framing of an opportunity. I mentioned earlier that I wanted to see the highs taken here and not get left as equal highs. Then if I had some type of displacement from there, I could have got back in line with the shorts. I mentioned balanced price ranges that were above us and why price shouldn't want to come deep into it, deep into the buy side. Like what's the reason why? I would assume that. And we can see that all that stuff was valid in terms of the analysis. It just didn't offer me an entry. So aside from the entries, that's the least of importance. I just mentioned like a very strong, detailed explanation of how I look to frame opportunities from the higher time frame to the lower, in line with the overall narrative. But then again, there's also other things to help me continue to trust what's going to take place, like the balanced price range I mentioned. Why should price not come up there? Those types of things are more important than where is Christian going to take an entry, because I want to follow him, right, and try to pass a funded account by just copying somebody. It doesn't do nothing for you. I'm not saying you guys are like that, but so many people are like that. I get blown up daily in my DMs. It's not something you should look to do. And you can't name or ask anyone, right? They can't name anyone that was profitable or made a huge, made huge wealth in their life because they took signals from somebody. There's not one millionaire signal taker, right? It's just there's a reason for that. Because you don't know what I'm thinking for the most part, or whoever's thinking. I showcase what I'm thinking. So then if you do choose to make your own decisions, at least you have an educated decision. Not that I'm promoting you to copy the trades I take, because I'm not a financial advisor and I can't give financial advice. But I think it's really important, if you're even taking signals from someone, if any of you guys do that, they need to outline the way that they're thinking. What's their risk protocol? And if you don't follow it exactly the way they do it and get out exactly where they tell you or get in exactly where they tell you, you're not going to have the same result. And then a lot of times signal providers get called a bunch of names because people, they go in not even following the rules of what people are thinking, of how they're supposed to operate, or they don't take profits where they're supposed to because they're super greedy and they haven't worked that out. There's so many variables. That's why I don't sell signals by themselves. I have my private community, and whatever I do in there, I'm on here doing this type of stuff. I mention where opportunities are at, and it's up to you to decide. I show where I enter, show proof, live account, show proof, execution arrows. And another thing, even more important than all that, the execution arrows, I don't take more than 2 or 3 trades a day. It's very important because I will never overtrade, and you shouldn't either. You should take that advice. It's very, very important, like we mentioned earlier. You got to be able to map out what the conditions are and position your risk protocols accordingly. It's not the sexy, flashy conversation, right? But hey, most of those people that do give those flashy, crazy conversations claiming they do this or do that, most of them are lying. Majority. So remember what I mentioned about this fair value gap down here? Again, the whole Kraken correlation that's taking place is a big reason as far as why I'm not like pushing anything. We see this is an interesting situation here. These consecutive up candles, if we move up, there's another bearish order block, right? So 2-hour bearish order block, I said, when it traded into there, I wanted to see if there was a potential opportunity for my model to show, right? I didn't see something that I wanted to participate in. Intermarket relationships got me a little hesitant to trust that this is going to continue to be so extended. Obviously, sometimes it's going to deliver against the rules that you have. But again, I'd rather have the pain of missing a move and the pain of discipline and following my rules to a T rather than the pain of regret. I would much rather, and if I take an entry outside of my rules, I trust my rules so much that if I do something outside of that, I'm breaking the rules and I feel guilty, even if I made 1,000, 2,000, 5,000, whatever. Okay? And you have to get your mindset to that point. Because again, what'll make or break you is whether you can follow a systematic approach where the rules are painted out perfectly, right? Very clear, and you're able to follow them and repeat them. That's the only way you get repetitive, consistent results if you want to make this an income, right? If that's your goal in any capacity. Because how are you going to expect consistent results if you don't do consistent things? Like, if you go to a job, you do the same stuff over and over and over. You don't just all of a sudden do whatever the hell you want to do. You'll get fired. Okay. It's just the way it is. And trading is no different. For some reason, majority of people think it's different. The mindset in terms of, why you need to have rules, why you have to follow them. Well, the why is, you want to be consistent. So you got to operate consistently with consistent protocols. And then, of course, experience and, a laundry list of other things. All right, so yeah, let's see what this fair value gap does here. Yeah, it's a very aggressive downside delivery. So we have this high here. We have this order block here. And we have this fair value gap. So if price was to violate that, get up above this high, that would disregard any type of short. So say you hypothetically took a short here, although this is a super high risk short, but we do have a target. Say you took a short here, your stop would go above that high. And then if it's violated, you sit out and relax, okay? Because if it takes this high, we now have 1, 2, 3 PD arrays in this specific piece of price action we're trying to gauge a potential opportunity off of. So that would be how you would invalidate from the lower time frame while you're managing a trade. In this case, being a short, Again, this would be a high risk short because it's already delivered a large portion of whatever it wanted to decide to do. Seems as though instead of having a bearish day, power 3 wise, we can observe how this has now delivered a pretty solid bearish power 3 delivery. See, and then we got a target down here. Invalidation's up at this high. And you know, say you did take a entry in there, you already pretty much already hit 40 points, even if you entered a little bit late. So just that simple, you know. Just that little piece of price delivery right there, that little logic that we just painted, even if it doesn't reach down into here, just that small amount consistently taken down on a daily basis or a couple times a week, that replaces a job. You know, and look, we waited, stayed patient, waited, and something presented itself, because we are not in a state of panic. We're not in a state of, oh my God, I got to take a trade right now or I'm going to never trade again. Oh, it delivered, so I'm not going to be able to participate. No, all those things are incorrect. You know, but you wouldn't be able to logically paint something like simple like this or anything else clearly if you overdo yourself early on, get beat up, and start doubting yourself, you know. And again, if this was to then violate this high, we then start to consider, you know, considering DXY's tanking, we consider the fact that, you know, maybe this turns into a market maker buy model. Okay, but again, unless that takes place, all right, we're trusting the higher time frame here that it's pushing price lower. 2-hour order block, held price. We got that higher time frame downside delivery. Red flag is the fact that there's a crack in correlation overall. Pretty heavy cracks in correlation with the DXY, the bonds and yields. You know, the yields are in line with the DXY, but the bonds and the indices for some reason are just not working out. And the currencies are also, the foreign currencies, they're also doing whatever the hell they want to do. So again, it's a high risk environment. We see that it delivered, right? We, you know, pointed this fair value gap out as a possible entry, something I chose that I wasn't going to take, right? Again, you make your own decisions. We waited, watched the response from this 2-hour order block. Once it hit that 2-hour order block, you saw me drop down to try to get a closer look to see if any of my models were performing on that 15-second lower time frame. While I framed it from the 2-hour order block retracement, right? It came into that order block. And then price now delivered away from it, got underneath this order block. We pointed out this fair value gap, pointed out the invalidation validation points, and mentioned possible entry opportunity. And you can see how our patience led to reward. How our patience kept me and you out of bad trades if you followed what I was saying. You know, again, I'm not a financial advisor. You make your own decisions. Wins or losses are not my responsibility. But you can see validity in the things we do, the way that I operate. There's a rhyme and reason. And yet again, it's on full display. So yeah, so let me ask you this. Has everything made sense so far, you guys? From the mindset we've had, from the things that we've outlined, any of the stuff that we've talked about, do you have any questions about anything? I'd be happy to clarify whatever it is that you may have an issue with. And I hope the audio is okay, right? We talked about a lot of important stuff today, so. What's up, Nutty Fuffa? Appreciate you hopping on, brother. It's okay if you're late, you know. But yeah, pretty beautiful idea here if you ask me. Over 70 points given. And we didn't have to take a trade before the open. We didn't have to take a trade at all in here. We let price provide evidence of what it was going to do, and then boom. Yeah, I hope you guys got value so far. Today was a very, very fruitful day if you were looking to learn how to operate. And when things are a little cloudy when it comes to intramarket relationships, how you need to behave. That is much more valuable information than me pointing out the entry that I just pointed out live. As always. See, that's a banger. Over 100 points. Almost over 100. Now we hit our target we were identifying if price was going to slide, as it has been showing us. Now our overall target for the morning has been met entirely. So yeah. Pretty fascinating. It never gets old, let me tell you. It never gets old. It's always amazing. And the currencies, played a bunch of games. Damn. I'm definitely going to have to look into what is happening in the realm of interest rates. Like, what is causing the rates to do this? Obviously, it's something geopolitical. It has to do with the economy and all that other stuff. Whatever's taking place in that realm of things. But, oh shit, it was hella loud. Yeah, I hope the audio's doing okay. I got a lot of red flags showing right here, so I hope you guys can hear me and have been able to hear me well. Because again, we had a very, very useful conversation today. Loud and clear. Thank you, Joe. I'm not sure I've seen you around here, but God bless you, brother. Appreciate you hopping on. If you've been here for a while this morning, hope you've gotten value. I appreciate you spending time with me this morning. Same with all you guys. Appreciate you guys a lot, for real. What is that? Yeah, no worries, brother. Again, thank you as well. We got this vast world of social media. We got this vast world of trading online, you know what I mean? And many, many opinions that are on social media. And the fact that you guys spend time with me, a small YouTuber, aspiring YouTuber, I guess you could say, and a trader that really loves this industry and wants to see others get value from things I share. Your guys' time is greatly appreciated, because I know trust is hard to build in this industry. It's one of the hardest industries to build trust. And God's blessed me with this skill set, and it's kind of heartbreaking to see how the industry is, and a lot of the people that are in the industry. There's a lot of garbage, a lot of individuals that are just, no one should inspire to be some of these individuals. But again, this industry is beautiful. It's amazing. The opportunity is vast, and it's something that I love. And, it's much appreciated that y'all choose to spend time with me spend time with me trading and find interest and value in the things that I provide. That's the only reason why I even do it. I could just be off social media. I don't have to be on social media. I don't need validation. I don't care about, fame and all that nonsense. Once I was able to help one person make trading an asset to them, it's just like being able to help, like some people get help, like some people get inspired by helping the homeless, stuff like that. I mean, that's a good thing to do, obviously, as well. But when you're able to give someone a skill set that can really impact their belief in themselves, their financial situation, and just, turn into something that's just magical. I mean, it's a crazy feeling. I didn't ever think about that type of stuff when I first started trading. I never thought about that. I never thought about doing that. I just thought, let me just get in and be a trader and do what I'm going to do. And it's turned into what it's now turning into. It's something bigger than just me. It's helping other people and trying to be a light in an industry that has so many dark characters that just want to hurt people and steal people's money and lie to them and all that. So I just feel, more good people should be out here showing the skill set, versus just allowing all these clowns on social media to rent Lamborghinis and Ferraris and flash this lifestyle that is only accomplished when you have the certain realities intact and behave a certain type of way, So, yeah. So, yeah, I appreciate you guys, for real. 1 to 3. Good job, Kamal. Well, you probably had to work for that one, huh? That thing was not moving for you. It was definitely taking some time. Yeah, I hope you got in and out safely. But yeah, everything, again, is not supporting the indices continuing to do what it's doing. But obviously, sometimes when things are cracked in correlation, again, I mentioned this entry for me would have looked as high resistance. I mean, it would have been low probability, right? But obviously it delivered. The only reason it's low probability would be because of the cracks in correlation, and because it's classified as that. Also, it was really aggressive, already sold off pretty dramatically. My risk would have been cut in half if I took that trade. But I decided up in here that I didn't see anything that was going to be worthwhile that fits my rules. This one, I mean, you can make the argument that it somewhat did fit my rules in a decent capacity, but I have no urge to force or get into something that I'm just like, might as well just wait. Obviously it delivered a massive over 100-point move again. I mean, I caught a pretty large portion yesterday, walked away with like 65 points anyways. So, I mean, that would have been great to catch a 200-point move. If you got in trusting what I was mentioning about it, I hope you followed the risk rules, cutting your risk in half because of the overall scenario. It already delivered. We still have equal highs. Correlation's not really intact, really. But again, something fruitful came out of today. And then aside from that, all the other things that we've talked about this morning, those things are all vastly more important than me coming out here and throwing signals in your face. Because, like I mentioned earlier, there's not one person probably on this planet, at least as far as I know, that got rich or succeeded in life as a professional signal taker. Just it don't work that way, because you don't know how they're thinking. You don't know, what they're thinking in the moment, especially if they're not live. If they're just sending signals in Telegram or something, it's you're putting yourself at risk, and you don't even know what the hell's going on in their mind. Maybe those people had a bad day. Maybe their wife broke up with them, or they got a divorce. Maybe they got in a car accident, or maybe they can't pay some bill and they're stressed out. And then they're in here trying to send you signals. So you're taking signals from someone that's overly stressed out. You have no idea what's going on with their personal life. You have no idea what they're actually thinking. There's just too many variables, for you to feel 100% confident, no matter what they try to show on social media. At least that's how I view it. You could have a different opinion. But that's why I don't make a signal service. I could easily do that. I showcase in front of people consistently for 3+ years at this point, going on 4 years straight, how consistent this stuff is, and the way I view things, how I apply these concepts, so. So we see that fair value gap here. Still holding, still running. Still running. Run, Forrest, run. See, now we got the currencies opening up as well to the buy side. Again, we got the bonds just continuing their rampage to the buy side. Yields continuing their rampage to the sell side. That's definitely affording DXY the weakness that we see, or the interest. There's no weakness or strength. It's the interest for them to offer price lower. That's the proper way of talking or thinking about prices delivery. There's no buying and selling pressure. If there was, again, countries that hate America or any other economy or country, they'd be able to go in there and just short the crap out of everything if they hated them. If they had enough money, if it was not controlled, they'd be able to tank everything in every market. And it just doesn't work that way. That dispels any idea of buying or selling pressure. That's a very logical argument. And, that's the reality. It's hard to make an argument against that, And that's how we know that there's an algorithm or some type of something that's coming up with the logic that we can track. And because we can track it, we frame rules around it, we're able to then get in line with stuff consistently. But yeah, this was massive. Like the same thing happened yesterday, right? Like I caught 65 points, took two entries, caught 24 in one, then 44 in the other. So what is that, like 68 points? And then of course it ran like 200 points. I'm like, oh man. But again, the minimums are all you need. 20 to 30 points in the Nasdaq a couple times a week. 5 to 10 points in the S&P. That's the proper mindset, proper expectation. Because if you're only aiming for things like this every day, if you don't accomplish it, you're inviting negative thoughts. And then those negative thoughts will make you hesitate. And then if you don't hit that, you get home runs every day, you're going to just discourage yourself, especially if you're new. It's unnecessary stress you put on yourself. Trading's hard enough, for the new traders. It's hard enough. And even for people that are well versed in trading, there's still always a psychological battle going on, especially if people don't take rules serious and plan around managing themselves. those types of scenarios will always come up. That never goes away. You just learn to manage it better and start to trust your abilities more, so the noise in your head goes down. And then, of course, if you frame all your setups and your decision making off of your system rather than how you feel that day, it doesn't matter what happens in your life at that point, because you're systematizing everything. So your decisions are not based on emotions. They're based on, is the model in play? And is everything systematically working as I'd like it to see in order for me to make a decision that separates the emotion from the system and the entry? That's a skill in itself, and that takes years to master. That's the main reason why this takes so long. The technicals are not the hardest part. They got their difficulties and whatnot. But learning things like the self-management, how to separate yourself mentally from the result, separate your life events and how you feel from the entries you take, keep it focused on the system, the entry. It's a skill in itself. It takes time to master it. Again, that's not a sexy thing to talk about, But I'm not here to, talk about Lambos and shit that most of these people don't even actually own, just to do marketing. I'm not here to do that, because it doesn't serve you well. I can't sleep at night giving people horrible advice, lying to people. I don't know how people live with themselves and do all this fake nonsense. Like, it's incredible what money can do to people, what people would do for money. But I will not put my integrity in jeopardy and to put other people at risk just because I need a click or some other BS. Just not going to happen. But yeah, you can see how this fair value gap I mentioned earlier, it's actually giving a nice little response too. So we're way overextended. Okay, so taking any short here is very high risk. Be extreme high risk at this point. So it'd be probably like the next best potential assumption would be, maybe we want to see price give a retracement of some kind. Maybe that, in some way sets up some type of counter trend idea, or you just wait till tomorrow. We'll see what takes place. Yeah, you notice how we have this new week opening gap. So new week opening gap from a while back. Split that in half. You see the midpoint there. Respected that pretty well. Got below it. Used the low of that new week opening gap in conjunction with the 2-hour bearish order block I mentioned earlier. Price delivered away from it. All right, then we were able to spot the fair value gap in there. Then if you take the low of this new week opening gap above us to the high of the other fair value gap up here, or the new week opening gap here, at the middle portion, from what I've been able to understand, when there's two new week opening gaps in close proximity like this, the middle point of that is called the event horizon, right? And then you can see that was also respected as a pretty dynamic area where price delivered, fulfilling the fair value gap down here. So definitely an interesting topic you may or may not be interested in digging into. It's not needed, obviously. It's just another one of those cool little things ICT talks about to support particular ideas. Yeah, it's pretty beautiful delivery here. So let's see what happens if DXY continues to tank, right? If DXY continues to tank, the yields continue to tank, the bonds continue to rally. Maybe we see these currencies continue to rally. I think there was S&T at the lows here too. Yeah, there's S&T at these lows. But yeah, if all that just continues, then again, that just justifies a counter trend idea. Again, it'd be counter trend, right? Overly extended markets, if you were to take an entry as a continuation, like the one I mentioned over here, you cut your risk because you never know. You never know. So you might as well, if you didn't catch the initial portion, you want to make sure that you are managing risk properly. There's different scenarios where you have to cut it. Keep it small. Take whatever it offers you if it gives it to you. But it's best that if things are overextended or really aggressively pushed already, and you're trying to be a part of it, it's best to keep your risk lower. Because the initial entry, they probably had the best risk to reward. If that was already offered and price just delivered, and you missed it, then you have to consider lowering your risk just in case. And then of course, if you're doing a counter trend idea, given the fact that overall, at least for now, price has been very aggressive favoring sell side. If there is a counter trend idea, right, like a buy happening in a overall downturn, you want to cut your risk there as well by half. I think that's a reasonable, understandable rule, and it'll save you a lot. It'll save you either a lot of money or a lot of demo, whatever, that's the stage you're at, or it'll save you heartache and the pain of regret. It'll save you that, and it'll be a paper cut rather than a big stab wound that you just allowed yourself to, get taken advantage of with, Yeah, so price hit this new week opening gap. We see a pretty beautiful response here. Now it's pulling back to the middle portion from here, from this high, or this new week opening gap low to that new week opening gap high. So, sometimes that can also end up being a target as well, a way to target or frame out a particular magnet in price. We'll see if that takes place. But, disregarding that, you could just frame out, from this high to that low. If this is going to continue going lower, it should be able to continue this structure. It's reasonable that they're reaching into this. Take off some of the annotations, see a naked chart real quick. So you see how this high is here? And that, you can make an argument that started the move. That's great. But where's the swing high that was more aggressive in that range? The most recent aggressive high, if we're measuring out this range for premium and discount, it's best to find the one that was the most aggressive and the most recent, then measure out from that high to the low, in this case, because we're bearish, to find your equilibrium point. So that the equilibrium point, using that logic, because premium and discount on these lower time frames kind of moves. That's why sometimes price won't come back into a particular equilibrium point. Say you put it from this high to that low. Maybe it fails to get to equilibrium up here, right? But if you move it down here, right, if you take this approach here and go study it, because that's what you should do. You shouldn't just apply it and start trading it or making any decisions off it unless you study it first, right? But if you go back and you study premium and discount on these lower time frames and just observe how price delivers using that type of logic in terms of framing the premium and discount, right? Moving it to the most recent aggressive high to low, and then map out that equilibrium. A lot of times you'll see that is the one that it likes to refer to. It's kind of close in this case for this example. It's a little bit, just a small difference, but sometimes that small difference can cause a world of impact and be the deciding factor as far as whether you gauge that we're in a premium or not, you know. And maybe that's part of your rules. Maybe you have to sell in a premium because that's a solid rule to have as well, or buy at a discount, you know, in whatever range you're looking to trade within. But yeah, so we have got this fair value gap here. Let's see what happens. We got DXY now running back into that fair value gap. But the next opportunity I'd be looking for is the next macro, which is in 10 minutes. I wouldn't be surprised if that macro ends up, you know, if DXY does start getting some legs and breaching into buy side a little bit. I wouldn't be surprised if price was to give a decent sized retracement here. We got buy side up here. We got this fair value gap here. We got this fair value gap from earlier. It's that 2 hour little piece of a fair value gap. Filled that in, so now we could use the full fair value gap level. And again, we got this low down here as well. That's February's low. Isn't that interesting? That's a monthly low. It's not a previous week's low. So we'll see what DXY wants to do here. Yeah, now we see the currency's giving a slight retracement. So we'll see if things start to show interest in tipping off a little bit. It's been a really nice range to the downside. So you can imagine, like we talked about when we first hopped on, everyone is probably trying to push shorts. Let me find a reason to short. You know, that's the main reason why earlier I wanted to see these equal highs get taken first before I made any decision to try to trust a short. I mean, you could somewhat make the argument that it did kind of pierce these highs up here, right? If you look at this, this is London's, this little box down here is showing London, the range for London. So, I mean, I guess it did, you can make the argument to say that it did take out London's highs, which does have liquidity there. But I wanted to see these equal highs taken first. It didn't even do that at all on any of the indices. All of a sudden, it ended up doing it in the, what was it, the Dow. It ended up purging it aggressively, but the Nasdaq did not. So there's another argument with the fact that there was S&P there at that time. But then the intermarket relationships were really foggy. Nothing was in alignment yet, even when that was taking place. This was happening while the Dow was exploding to the buy side. And at this time, we noticed that that was literally just to purge out the. Now we see this too, right? Nasdaq is stagnant when it comes to delivering to the buy side. The S&P is kind of, you know, slow moving, right? Giving a retracement. But we see the Dow just aggressively doing whatever the hell it wants. Took out this low. Pull that over. Is there any type of low there too? No, there's no low there for the Nasdaq. No low there for the S&P either. So yeah, right now, currently at the moment, if anyone was to push a sell, you're forcing things and you're chasing price. Because there's definitely, because of how aggressive it's been, and I mean, you could see the Dow's even, you know, racing up. you can make the argument that this, we want to see what these consecutive down candles, how that behaves, because that may turn out to be a bearish breaker, right? If that is going to be respected, though, we got to see, we need to see a response from there. It should not be able to get back to the midpoint of this. And the deeper it was to pull back into this range right here, because this is the breaker block, right? The area in which we don't want to see price breach. We want to see a response away from to validate it. If it was to violate that, then obviously our target then becomes the high. And this will invert. Another thing too, most people don't know, pretty much all of ICT's PD arrays, maybe aside from like rejection blocks, I could be wrong there, but for the most part, I see majority of the PD arrays, like order blocks and fair value gaps specifically, and breakers, they all turn into inversions. When they're violated and don't get respected, you'll see that it inverts. And then and if it's to act as resistance, in this case, if it violates it, it then acts as support. And then that's just another way in the moment that you can start to build a narrative or assumption towards the other direction. If you're comfortable with going from one side to the other. And obviously that takes time to learn. It's not something that you just jump on the chart, hear me say this, and then effectively go deliver results from it. You have to go study it. But for the most part, that's another one of those things that majority of people don't know. But yeah, so this retracement here, if DXY aggressively smashes higher, we may end up getting another leg lower. Very high risk, right? I'd like to see a little deeper of a retracement if that was to be the case. But yeah, now we can see how prices kind of not really doing much. We're going into the macro though, so we'll see what this macro is going to do. But it could really do either thing, given the fact that the DXY is now aggressive to the buy side. There is an interest to possibly see this continue. And then of course we have the target down here. I'm not sure if that's too overzealous. I think it may be too overzealous. But we do have this one down here. But it's already delivered massive. I think that's probably over 300 points. Yeah, 400 points. So I'm not too sure how confident I am that it's going to have much more of a deep decline. I mean, it delivers, that's a massive range. We've been seeing huge range delivery the last couple of days. Over like 800 points, right? If we come over here to the start of the week, from the high to the low, yeah, almost a full 800 points. There hasn't been a week like that in a long time. They've gotten close, but that's just like massive. All right, so again, when you see things like that, your risk, again, it's another one of those scenarios. You need to be very mindful of what you're risking and what your expectations are. Because if it's delivered so much, I mean, it doesn't just go thousands of points every week. It just doesn't do that. Statistically, it doesn't do that. Every so often it does. But it's not a continuous thing where it does that. So when it delivers multiple weeks of range within a couple of days, I mean, you got to minimize your expectations. Again, if you're going in there aiming for the minimums, 20, 30 points, I mean, it's very easy to manage. But then also you have to consider the amount of risk you're taking, right? Are you going to take a full amount of risk knowing what I just mentioned and knowing that that's a fact? Or are you going to cut your risk by half and relax? Don't have crazy Lamborghini lifestyle goals when things have, done certain things like this. You shouldn't have that anyway, like I always say. Just keep your eyes on the minimums, because that, the earlier goals before you get there are required. You have to cross one bridge before you get to the other. So the better you manage your expectations, the more calm you'll be in the market. I remember I mentioned that there could be a possible retracement here. Probably not the best idea to short when we're so far down. Now, if price runs up into here and we get a displacement that violates this low, maybe there's more of a likelihood that this may actually not be an overzealous target. For now, I'm going to assume that this is overzealous. We're probably not going to get down there. Oh, what just happened? Right, but we'll see. It's more logical to have framed out a retracement. So yeah. This line here, remember it's the middle portion from this new week opening gap to this other one. And I said sometimes it acts as a magnet. When you can frame that out, sometimes it'll act as a magnet. And look at how price is behaving. So again, it's an example of ICT's event horizon as I've been able to understand it. All right, so we'll see what happens here. If this was to violate this low and it doesn't go any higher, if we didn't deliver so aggressively and we had maybe like 100 points or something like that delivered, and this was to be violated and there was a logical target down below, this would turn into a continuation variation of the bearish breaker. Just like how the fair value gap over here, we were able to frame out as a possible continuation because we framed this target out. It'd be a very similar situation with this. Every single ICT model, for the most part, has a continuation variation. I mention this a lot, and it's just one of those pieces of information that help you not be so upset about missing a move, right? We were not upset at all in here about not being a part of some of this, right? We went in there and looked for something that can logically become a continuation and delivered like gangbusters, like ICT says, right? But yeah, let's see what price wants to do here. Again, I think it's very overzealous for us to demand that it's going to come down here. Maybe it happens in the PM session, maybe it doesn't. I don't believe for the AM session expectation, for like moving forward from right now with what we've been given, I don't think that's a likely thing. I think it's more likely that maybe this gets taken out. Or, price could be stuck and just be held up. I'm not sure. Yeah, there's no crazy news events either. But yeah, this is the last week. So again, that's another element. I think I mentioned that earlier too. The end of the month is also something to consider, with your risk and stuff like that. Start of the month, start of a week, you want to keep your risk low. Like Sunday, Monday, if you trade those days, I don't trade them normally. I did trade Monday yesterday for a reason. Sometimes things are there, sometimes it is. Sometimes it's clean, sometimes it's not, because we're in the beginning of Power 3 at the beginning of the week. So if you have like a bearish decision, like you want to trade to the downside, most of the time the start of the week is going to go against you. So if you're looking to force shorts on a Monday and price is going against you, you a lot of times you're going to be taken out just for the week to then deliver what you were looking for. So again, it's, just some considerations. And then towards the end of the week, like a Friday or towards the end of the month, again, it's another position where you lower your risk. You lower the amount of trades you take. Let price tell you, like today, right? We were patient. We allowed price to give us more information and then, provide different areas we could execute on in a continuation fashion versus trying to push things and force it. We let it deliver without taking trades outside of the rules, without compromising the process, and the rules being one of the rules is these equal highs. I didn't want to sell inside of an equal high or with that available. The risk of it coming up there was pretty high. And then when price was printing, right, we observed the regular trading hours gap. It respected that. Price, I talked about that large wick on that 2-hour time frame, like the relationship with the imbalance that's next to it and that large wick that was right next to it, how that could have been a reason price didn't want to come back up there. And then obviously we continued to watch different things unfold, supporting that idea, like this as resistance, and drop below the 2-hour order block, return back to the 2-hour order block. The 2-hour order block held. We dropped down, tried to find an opportunity, didn't find one. Price dropped down below this low, then I called that out, and then it again delivered beautifully. All right, so yeah, we hit this event horizon, right? The low of this new week opening gap to the high of this one that's in close proximity. So we'll see if that's going to act as some type of responsive level. DXY is now aggressive to the buy side. It's now turned around and finally found some legs after the whole session just tanking. Now we see the currencies also supporting the downside delivery. Very lagged response in terms of intermarket relationships. But we've known that from the start of the day. And that, again, helped us gauge what our risk profile would be, on top of course, all the other things we mentioned. So yeah, now we want to see what the bonds are going to do. Is that going to give a nice rejection? If all those things start to be in alignment, then again, maybe this low over here is not overzealous. But you don't want to go into the market thinking that 800 plus points is going to be delivered on a daily basis. Generally it's anywhere from, 100, 200-ish, 300. Definitely not 400 to 1,000 points in a day regularly. So it's a pretty special event here. Of course, the news is going to tell you that the world's ending, but that's what they do. So yeah, let's see what the behavior is going to be with this fair value gap. Because we're now setting sell side. Okay, we have relative equal highs here too. So we'll see if this area here that I mentioned earlier is going to show any importance. Let's go scrub over to the other indices. You see the Dow delivery on the higher time frame here? It's vicious. Okay, it's vicious. It's a bunch of vicious price delivery. We do see the fair value gap that it respected though. Kind of left this fair value gap open too. But yeah, the cracking correlation between what the S&P, the Nasdaq, and the Dow are doing, I mean, it's pretty apparent. The Dow's kind of hesitant, and we just see the S&P and the Nasdaq falling off the face of the earth. But yeah, so let's see what happens if we can get down below this low here. Yeah, if the DXY can continue going higher, this, again, may turn into something worth studying. Got this potential inversion for value gap in here too. Event horizon was met, delivered away from it, so that's pretty interesting. Again, expecting more large range to the low down here is very overzealous. Again, it could get down there, but traditionally, as you walk forward, if you see stuff like this, you don't go in there demanding more large range to take place, because the risk now of them looking to pull price back to some form of a premium to reposition, I mean, it's more likely to do that than it's not. Of course, there's always a possibility of it doing whatever the hell it wants to do and getting down there if that's what they want it to do. But generally, things would end up capping the daily range here and then coming back in, holding, and so on and so forth. But we're in some crazy times, so we'll see what takes place. If it was to violate this low, again, line in the sand would be here. And any type of engagement, if you consider it at all, would be half risk, quarter of risk, of your normal risk. Just because, it's already overzealous to think it's going to go 1,500 points in a day, right? Let alone taking an entry when it's already delivered so much. Right? That's not to say that it wouldn't get there, right? It's just unlikely that it normally would do that. So the reason I'm saying that and highlighting that is to paint your expectations properly, because I could sit here and be like, oh yeah, oh, I'm getting in here. Yeah, it's going to do this all the time. See, I'm the best, whatever. And then, maybe it delivers down there, but then it's going to take you into the next day, especially if you're new, and you're going to be expecting that when that's not the reality, So yeah. So we'll see what it wants to do with this. Is that an order block there? Let's see. We got this up candle. We could see if we can monitor that. Inversion fair value gap. We have a order block here. 7-minute order block, 8-minute. Then we got a 10-minute order block down here as well. And then a 30-minute. All that layers together. And would, that'd be a justifiable reason to see resistance. See if that would hold if it gets down below those levels. Right, seems as though it might. See, let's see if there's another opportunity here. If this delivers down to there, it's going to yet again be showcasing you a reason why, you missing a trade opportunity and being upset about it. I mean, you're able to go in there and observe things if you understand rules. If you understand your model thoroughly. Right? Again, we highlighted this particular scenario. If we're trying to paint a short, we understand that it's been extended dramatically. There's a likelihood that it will stop because it doesn't generally overdo it like this. There's a risk of it retracing and now blowing out these equal highs because it's been so aggressive. And since it's already delivered such a huge range, this would have to be half risk, like no questions asked. And if not, you'll learn on your own. If you think that's not advice worthy of at least studying. But yeah, you'll quickly learn. Trust me. I know I did. But yeah, there's a possibility for this to be a breaker, right? There's a low here, high, lower low. If DXY was to continue going higher, right, there's some justification to feel like, okay, this is possibly going to continue. But again, it's not without red flags, But yeah, so let's see if that would be a particular idea worthy of delivering down to here, given the risks involved. Right? It's undeniable that yes, a breaker's formed here. And so we'll see if that's going to hold. So just that delivery right there, 30 points. If you missed everything throughout the morning, right? 30 points was offered there. You could have secured half risk, right? But still bagged the minimums. So minimums were secured there. Over like quadruple the minimum was delivered here from this one. And that's all aside from the continued delivery that was up here that started the move. Right? So I'm kind of highlighting again how you don't need to worry about missing an opportunity. There's ways to frame counter trend ideas. Right? We talked about that a little bit earlier. There's ways to frame continuation variations if price is going to continue towards some type of particular level that's logical. Again, it's kind of, at least, from what I've seen over the last, 6-ish years, I mean, it doesn't, if it delivers so aggressively, it doesn't many times deliver 1,500 points. I mean, that's insane. Literally insane. And this was literally 800 in itself, I think. It was 400 here and 400 in the other day. I mean, 400 is insane. It's a massive move. It's beautiful. But yeah, let's continue to watch this here. Remember I mentioned this could be a possible bearish breaker. A line in the sand is the high up here. If this breaches this, again, these PD arrays turn into inversions. Breakers do, fair value gaps do, order blocks do. They all have this little phenomenon. Again, I'm not 100% sure with rejection blocks and stuff like that. Never really tested it out. But yeah, let's study this and see if the red flags I mentioned show us reason, why we should have preferred to stay on the sidelines with this opportunity. All right? Well, we'll see again. This doesn't get invalid until it breaks through the upper portion up here. If you're using breakers, because that's the model we're studying here after price delivered so aggressively in terms of following a potential continuation. Right, DXY's turned here, but we'll see if the red flags impact this and just isn't allowed to deliver down to this massive. I think it'll be like almost 600 points if it gets down there. So got DXY supporting the idea. Got the currencies supporting the idea, going lower. We got relative equal lows. If we look at 15-second chart, we now have a scenario where there's relative equal highs, relative equal lows. So yeah, we'll see what happens. Yeah, another macro is almost over. So yeah, once we hit like 8:15, this will be definitely the last opportunity we observe. We've been able to point out two very nice potential ideas. The first, fair value gap up here, right? I mentioned that if I was to take an entry, the second one would have been the one that I would have liked because of the response off of this two-hour order block. We painted that whole scenario and why I would have trusted this and what led to that. And now we're observing this final one and seeing if, this overextended viewpoint that I mentioned, right? How insanely weak it's been, or the insane sell side interest and the huge, massive, unrealistic, uncommon range that was created. We'll see if we'll see if us continuing to target sell side, given that, was overzealous or not. I believe it is. Think about if you got into this entry here. How would you be feeling, given all these things that are behind us so far? Right now, you'd probably be panicking. Be like, oh snap. Like, oh God, here comes the retracement. Yeah. See, I'm going to take a look at these lows here. We're going to flip over to the other indices and see what they got going on. Higher low, there's a higher low. Higher low. Actually, there's S&T right there. That S&T triggered up this this retracement back to this level I mentioned earlier. We're going to look at these. So yeah, given what we see here, again, I'm just like getting more solidified that this, again, would be an overzealous viewpoint to try to demand that price gets down into here, which is what we'd have to do if we're over here looking for this to drop into that. I mean, it's over 100-ish points, right? But again, we have all this background stuff that's taking place. It's more likely that they're going to want to run up here, stop these people out. I mean, if you were smart money and you operated the way they do, punishing certain liquidity pools, triggering interest in one direction, and then coming back, stopping people out, pairing up your other orders, then continuing to create the most pain possible. I mean, it'd only be right for them to want to come up here, stop these people out, maybe even run a little deeper, because equilibrium is somewhere up here if you take the most aggressive portion, the most recent aggressive swing high I mentioned earlier, which is this one right here. Go from this high to that low. Equilibrium somewhere up in here. So yeah, we'll see. We could see they're definitely building up, building up, building up. Got these relative equal lows. Could be deceiving. This type of stuff gets really deceiving because if you think about the psychology of everybody right now, of just like the normal trader that's just in the market, they're chasing. They want to chase. And every impulse that takes place, I mean, it's making them want to short even more. And generally that's used against us. Then they whip it back, take them out, then go. But yeah, I'm going to assume that they've already exhausted a lot of what they were trying to do. And the more likely opinion is them to, maybe continue this fakery, right? And just punch back up, target these people, and then call it a day. They may have a strong move, right? Get all the way up here. But yeah, I think we called out a very nice amount of scenarios. We pointed out a lot of very important pieces of information. Lots of very, very important stuff. And, from different scenarios, different things that allow us to think certain types of ways, make certain decisions, and all the way up into like the very end of potentially the range, and a lot of different things in between. But yeah, so it's 8:15 already. Generally I'm done before 8, right? If I wasn't live, or if I would have taken the trade, I would have been done already before 8, because that's when all this action took place. And yeah. So we're going to put a ribbon on it. If you guys got any questions, definitely let me know in the comments section. Don't forget to like and share the video with your friends or anyone that you think can get value from the things that we do here. And most importantly, I hope you guys got value. Thank you for your time. And I will talk to you guys on our next live, which is this Sunday. And then, of course, we'll be back at it again for live trading on Tuesday next week. All right, so God bless you guys. Thank you for your time. And I'll see you on the next one.